2 ways the Dow Industrial's worst week since October was foretold. I'm Bob Stokes with Elliott Wave International. It's not surprising that the mainstream financial press linked the Dow's 3.5% slide last week to the Fed's hawkish policy statements. Here's an example. The market slide this week began after the Federal Reserve on Wednesday afternoon added 2 rate hikes to its 2023 forecast and increased its inflation projection for the year. Another example addresses just the big drop on Friday, June 18th. Dow drops over 500 points on Bullard comments. Of course, Jim Bullard is the president of the St. Louis Fed. However, the Dow sell-off was in the cards before the central bank's policy statements. Indeed, our June 9th U.S. short-term update showed this chart and said, inertia grips the S&P 500 as today's 0.39% trading range was the smallest of the year, as shown on the Bloomberg chart. Low volatility precedes high volatility, and inaction leads to action. So expect some wide-ranging days in the not-too-distant future. Then on June 11th, the U.S. short-term update provided another stock market warning with this chart and commentary. The short-term trends in the blue chip stock indexes are starting to mirror the trends in early 2000, which led to a 39% decline in the Dow and a 51% decline in the S&P. Back then, the Dow topped on January 14th, 2000, but the S&P 500 rallied to a new high in March, peaking on March 24th, 2000. Currently, the Dow made an intraday rally high at 35,091.50 on May 10th. It's now a month later, and the S&P 500 made a new all-time intraday high at 4,249.74 on June 10th, unconfirmed by the Dow. The very next week, the Dow had that 3.5% drop, the index's worst week since October. As mentioned in these videos before, our analysts employ more than 100 indicators to keep subscribers ahead of price trend changes. Having said that, our primary way of forecasting financial markets is by using the Elliott Wave model, which has specific rules and guidelines. Learn what Elliott Wave analysis is revealing about the anticipated extent of the sell-off by following the link below this video.